moving through the early afternoon on Wall Street, and the tone right now is still constructive. Risk assets are holding up, with small caps, chips, and select healthcare names doing a lot of the heavy lifting. I'm Grant Mercer. This is Storm Stock Solutions, and let's bring some clarity to the chaos in today's markets versus the last hour. The big picture hasn't flipped, but it has deepened. According to reporting from MarketWatch, that record rally in small-cap stocks remains one of the defining stories. The bullish argument is that fundamentals for smaller companies have finally started to improve, giving this move some real earnings backbone. But the same analysis keeps flagging a key caveat. If Treasury yields continue to grind higher into 2026, that can very quickly become a roadblock for these more rate-sensitive names. So intraday traders are still leaning into small-cap strength, but they're very aware this is a trade that lives and dies by what happens in the bond market. On the upside scoreboard this hour, Nvidia and the broader chip complex are in focus. MarketWatch highlights that Nvidia's stock is now mostly shrugging off the latest headline out of Washington: approval to resume certain chip sales to China. Some analysts see a big opportunity here as a lucrative end market reopens. Others warn that geopolitics can change on a dime and that new restrictions could appear if tensions flare again. For now, the fact that Nvidia is taking the news in stride is a positive signal. It suggests the market believes AI demand is strong enough and diversified enough that policy noise, while important, isn't derailing the long-term thesis. Staying with AI, there's a really interesting under-the-hood angle emerging. As Charlie Garcia reports at MarketWatch, the real money in AI chips may not just be in the big household name designers, but in lesser-known companies that supply ultra-pure water and other critical inputs for fabs and AI data centers. Ultra-pure water is scarce and absolutely essential to make these chips, so those infrastructure plays become a kind of second derivative bet on the AI boom. These are not mainstream tickers, but they're the kind of under-the-radar stories professionals keep on a watch list when they map out the full AI supply chain. Healthcare is still pulling its weight as well. CVS continues to trade well after, as MarketWatch notes, the company once again raised its revenue and profit guidance for 2025 and laid out stronger-than-expected expectations for 2026. That's supporting the idea that investors are rewarding clear, confident outlooks, especially from big diversified health names that can offer a blend of defensiveness and growth. On the macro backdrop, that low-fire labor story remains a quiet support. MarketWatch reports job openings have rebounded, with much of the increase likely tied to temporary holiday work. Hiring itself hasn't surged, but the takeaway for the market is still that the labor picture looks stable rather than scary. That keeps the soft landing narrative alive and provides cover for equities to stay firm as long as nothing shocks the system. Now, in terms of risks, crypto is still flashing yellow. A MarketWatch deep dive into Bitcoin's November crash argues it was no accident. Instead, it points to an always-on hype machine that pumps prices and then blames macro when the selling hits. That's a reminder that Bitcoin and related tokens remain areas to handle with care. Volatility in that space can bleed into the most speculative corners of tech and growth, even if the major indexes are taking it in stride today. There's also a fresh wrinkle in the digital asset world that's more conceptual than market-moving, but still worth noting. MarketWatch is reporting on a push to create NFT digital twins of famous artworks, starting with Frida Kahlo pieces and raising the question of whether icons like the Mona Lisa could be next. For now, that's more about the evolution of collectibles than a broad equity catalyst, but it underscores that experimentation around NFTs and tokenization hasn't gone away, even after the last crypto cycle cooled. And don't forget, there's a quiet rotation theme in the background. Another MarketWatch piece points out that insiders at several well-known consumer brands have been buying their own stock, suggesting they see better value there than in some of the frothier AI names. That's a potential setup where if AI ever takes a breather, more traditional consumer names could start to take the baton. Into the next hour, I'll be watching whether small caps can maintain leadership without a pullback in yields, how Nvidia and the broader chip group trade as more investors digest the China news, and whether we see any spillover from ongoing crypto volatility into high-beta tech. All of that will shape the tone as we head toward the closing stretch of the session and our wrap later today. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,